What's going on? Welcome back to the channel. So today I want to talk to you about Serve Robotics. It's been a while since I've done a Serve video, so I want to go over some of the current data points, expectations for their upcoming earnings, and everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So on Friday, it went down 2.4%, 642 the low, 669 the high. So it did lag the market a little bit, and relatively low volume on a side note. So 3.1 million shares being traded, 3.9 is the average, and even comparing it to like a month ago, night and day difference. So it does go to show that institutions have really taken a step back and not really paid attention to it. So on Friday, you did see two buys. So some institutions might be buying the dip a little bit, but algorithmic trading did make up for the majority of the volume, and I think that's really suppressing it. So, which is, again, rather unfortunate. But their upcoming earnings, this is where they can really say F you to the market. We're a force to be reckoned with, and which could draw a lot more institutional investors to it. So in case you don't know, May the 8th, they did slate their earnings. So that is going to be after the market does close. Some current expectations for the earnings, negative 15 cents for the earnings per share, 486.81 thousand for the revenue. Over the last 90 days, 0 positive and 2 negative revisions to the earnings per share. So very high expectations all in all. So they've typically missed on the revenue kind of metric for the last several earnings, which has caused some volatility. But I think for this company, what they give for future guidance, that's going to be kind of the make or break it. Expansion, that clearly is a very big deal for investors. And so at the end of the day, I think just they need to hit a home run for this earnings to be taken seriously and to draw some investors and institutional investors, of course. But as far as this, the implied move is 16.67%. So anticipate kind of a move, like a dollar move in either direction is possible. But last two earnings were not necessarily seen as a positive, as you can kind of see. So one did result in it going down about 12.5% after 2 weeks, other one being 21.88%. So still, I think they need to really hit a home run for their earnings. But one thing that they did put out on Friday as well was a definitive 14A, so it's just their shareholder meeting. Nothing really crazy. So 4 proposed items, and none of which are really crazy. So just the directors reaffirming the Price Waterhouse, so the accounting firm, equity incentive plan, and then just this is just anonymous adding additional items. So nothing really crazy, but this is going to be on June the 12th, 2025. So if you just bought in recently, unfortunately, you can't really participate. I think you had to have been a holder as of a certain date. I believe right here, April the 14th. So again, if you, or it might be a different date, but nonetheless, though, I think it's a little bit too late, and still none of these are overly crazy. Some people do care about the directors. I myself, I don't really see it being that big of a deal at the end of the day. But when it comes down to the company itself, there hasn't been all that much in news. So again, even more importance is being placed on their upcoming earnings. But one thing I do want to bring up, though, is institutions really paying attention to it. So even though you haven't really seen that much crazy activity, during Q1, you did see Vanguard increasing 544,000 shares, which is rather abnormal given just everything. So even though you did see Nvidia sell out during the Q4, which was announced during Q1, that prompted all of this crazy pullback right here from the recent highs, you are seeing some institutions somewhat buy the dip. So when it did sell off, Vanguard was willing to kind of buy a little bit. Unfortunately, it looks like they are kind of at a loss a little bit as of right now. But as far as shorts, so shorts have been playing also a big part in SERVs kind of up and down. 20.38% of the free float is being shorted, works out to be 8.16 million shares. On Friday, shorts did increase 1.07 million shares. So they doubled down, which could be one big attributing factor why it lagged on Friday. But cost to borrow average 11.26, and just generally looking at what they've been doing, it's been sticking to kind of the 15 to 17% range for the last little bit. Recently, they did double down, so that's where it's sitting at that 20%. So they are starting to get a little bit more active. I think a lot of that is stemming from clearly their upcoming earnings, but 164,000 in calls, 159,000 in puts. That was done on Friday. 38% of all the options being done were bullish in nature. So even though it's kind of hovering around the lows for at least the last 6 months, you are seeing some kind of optimism, and that's being done through the options. Very low dollar value though, something to kind of keep note of. Of the calls, meaning the bulls, there was a consensus for it to be roughly around that 7 to 750 for this upcoming week. Bears are anticipating for it to be sub 6. So a little bit more upside is anticipated based on everything, with it right now at $6.50. It is trading between this pivot and this S1. 555 is going to be a strong support. That hasn't been tested for a while. Flip side, 694 and then 833 is going to be the next strong target / resistance points. There's been a lot of good optimism from the whole China-US trade war happening. So if there is a definitive deal that does come down the pipeline, that could really push the broader market a lot higher, because that would increase consumers' buying power, sentiment, and everything else. Even alone this upcoming week, you have a lot of big data points that could really move the market. So you have JOLT numbers on Tuesday, you have GDP, PCE on Wednesday. Thursday, you have the manufacturing data. Friday, non-farm payroll and unemployment, all of which could really add some optimism to the broader market. But aside from all of that, though, on the actual chart itself, let's kind of pop over here. So as of right now, it is above the ALMA, so it's doing not all that bad. It's improved from where it was, but a couple key levels to really watch for is that 50-day moving average, and that is $7.46. If for whatever reason it is able to touch that, whether it just be through broader market momentum or FOMO leading into their earnings possibly, then this is where you could see a very nice push higher to potentially even that 200-day moving average, and that is sitting at $10.52. So let me know your general thoughts on that in the comments below. But aside from that though, the market is just at the show me stage. So SERV's gone down a lot. So now the market's saying you need to prove yourself through obviously their earnings or other PRs that you are worthwhile, like a good investment. So that's kind of where SERV is sitting at as of right now. So let me know your general thoughts on that. Have you been buying? Have you been selling? What's your kind of viewpoint on it? A couple of things though. For those of you that are curious and want, for instance, analyst ratings, ownership, if you ever want to know whatever institutions are doing or whatever, take a look at 𝗖𝗢𝗡𝗡𝗖𝗧, completely free to have all this information. Link in the description below and also the comments. That being said, institutional ownership quarter by quarter. So in Q1, they did reduce their position by 16.33%. Strategic entities did increase 4.25%, and then other, aka retail, did increase their position. So pretty good stuff to see at the end of the day. So let me know your viewpoint on that. Hopefully everyone's having a kick-ass weekend. One final thing, pop over to my Patreon if you're looking for some kick-ass buy signals though on stocks, options, crypto. So link to that is in the description below and also the comments as well. With all that, appreciate all of you watching.